Hello, Joe. What's up?
Living the dream, baby. Living the dream.
You really? Are you really?
Well, I was reading some shit like people in, I don't know, was it Blizzard or Luna? Somebody 2.8 million turn into $1,000. Not being on that trade, I'd call that living the dream.
That is living the dream.
Yeah.
You're not living the nightmare. That's for good sure. Goddamn
No,
sure.
I mean, in some of my chats, people that were some of the Blizzard finance guys that were in there, these guys have had like, well, we were all bitching about Blizzard for a while, but um, you know, 200,000 turning into $200.
Yeah.
And I'm like, ouch.
Yeah.
I'm down, but I'm not down like that.
Yeah, I mean they tweeted yesterday, Chainlink pausing the Luna Oracle allowed several attackers to deposit millions of Luna, which is still worth 10 cents according to the Chainlink Oracle, to borrow all the collateral. The protocol has been drained before we could pause due to our time luck. So I guess the concept is here they deposited all the Luna when Luna is in fact worth 0.00005, and that allowed them to take, because Chainlink had paused the Oracle, that allowed them to borrow against a 10-cent value instead of the actual value. That's why there's no liquidity left in those pools of theirs. So
yeah, it's all borrowed.
That's kind of a fuck up. Although, yes, maybe Chainlink should have thought about that. But on the other side of it, if you have a severe dependency in your protocol on a chain and project that is steadily cascading downwards into the abyss to zero, then maybe keep an eye on your shit.
Yeah, no, I mean I'm surprised everybody wasn't just.
Why are you still giving loans?
Well, why aren't you freezing that one for sure?
Freeze the lending part. You can still leave it open for the liquidations, keep things running, but I don't know, maybe they had dependency, whatever. It's a clusterfuck, right?
Well, they shouldn't have been taking deposits and letting people borrow on the Luna
at this point. I mean, yeah, crazy. Yeah, it's like I mean, you don't even have to do it to protect other people. Do it to protect your protocol.
It just tells me nobody was watching.
Yeah, yeah. Well, people get into this chaos and they get crazy. So our buddy Sean got a little annoyed with a tweet I posted today.
Sean, oh, he did. What'd he say?
He's
XP?
I phrased it as leaked internal email. This is from the founder of Polygon, right?
I did see that one, yeah.
And I love this email. I friggin' love this email because this is exactly what I've been talking about on Twitter, is that the projects that come into this phase and the ones that huddle down and protect their runway and, hide in their corner and hope everything goes okay and they get out of it, those are the ones that fail. The ones that win are the ones that go aggressive, that seize market share, that go after things when everything's down, because that's your best opportunity. Anyway, Sean says he's not annoyed. That's cool, man. I'm just playing with you. But your tweet sounded a little annoyed. So anyway, double down, go aggressive. This was an email from the founder of Polygon to the team. Basically said, woo what a day, crypto's a mess. Then he says, we have peace of mind that this industry is here to stay. As for Polygon, we've been doing some amazing work in the past 2 years, and historically the bear time is when we deliver our best. When everybody is down and out, we press the throttle. We are highly capitalized with 300 to 350 million in USD plus 1 billion in Matic, even at the current prices. When best ZK team in the industry, best biz dev team in the industry, absolute gangsters in our DeFi Web 2 enterprise BD. Obviously, it's, he's cheerleading the troops.
Yeah.
And he said the next few months are the best days to keep building and keep growing, while the noise in the streets is the least. This is the time for us to double down on whatever we are doing, go aggressive, be it hiring, marketing, or spending on building out the most reliable infrastructure for our multi-blockchain vision. My point is this, and I actually have had several tweets about this. This is the time when everybody's down, when everybody's scared, when everybody's running out of money. If you've got the powder, go to town, because this is when you suck up market share, when you create a dominant brand. These are the things that companies do in downturns. You know, in the .com, the people that came out are the people that kept building, kept growing, kept beating the drum. So I love seeing this. I mean, you know me, I was already pretty bullish. Both of us, I think, are pretty bullish on Polygon in general, but thoroughly impressed with this
So
this
what was
email.
John's reaction?
I don't want to embarrass him. He felt like it was a shilling email, that it wasn't really a leak, that they actually put it out.
Well, that makes sense too.
Which is fine. Of course they did. It's all good. The bottom line is, I really feel like, and his point was that this is not the time to FOMO in, that there's more down to go. But, you know, I'm DCAing, I'm buying in on the way down on Phantom. And so if I have as much faith in Phantom as I do in, as much faith in Matic as I do in Phantom, then maybe I should be doing that as well. I mean, that's up to everybody else to decide for themselves. But yeah, I think we have more down to go. Absolutely. And people can decide for themselves whether they want to come in now or come in later or don't come in at all. So thoughts, Joe? Got any thoughts?
I thought it sounded a little shilly too, but I think it's for the internal audience. So it's to keep people from panicking and switching to other jobs and doing whatever, just to show that they're on top of it and there's a strategy. I think the leak was also deliberate too. Of course. To show that they're, you know, they're not blizzarding it and, like, you know, taking a nap or something.
Exactly.
That they're on top of it. I do think there's more to come down. I don't know if it's this week or if it's a month or whatever. I still think you have to have that capitulation wick, you know, down there somewhere. Very, very short-lived. I don't know if that's October, like the fractal suggests, or if it's next week. I tend to think it's a little bit further out than next week, just because I think everybody's kind of digested all the forecasted interest rate hikes, and I don't think there's anything there that's going to shock people. I think the Fed balance sheet reductions are going to have a bigger effect on taming inflation than actually interest rates. So you might not see interest rates go up as high if they stay aggressive on the tapering or up the reduction on the balance sheet. So when that happens, when the street digests that, builds it into their models, I mean, you know, that could have some effect. But, you know, to me, the big players want to drive it down still to get back in on more of it. Because everybody makes money on the way down too. The big players do. So of course they want it and they reload. So I think you guys are both right.
Well, look, I think Sean's just looking out for people. He doesn't want people to lose out, you know.
Well, the guy is so smart and he plays a very smart strategy. And it's a very, even though he's, you know, long and in short, and it's very, very risk balanced in that it's almost like he's straddling these things. And if it goes one way, and he's taking profits when he can, but he's not dumping his main stack.
Well, we're going to try to get him on next week because
he's
he did basically agree. So I think we'll get him to come on and talk and share some of his wisdom.
Yeah, no, everybody, you want to be here for that one.
Yeah, definitely. Most definitely. All right. What else do we have, Joe? So in a few minutes, hopefully, fingers crossed, 0x Fubar is going to come on, and I'm excited about it because he's done some great writing and some really in-depth reviews of tech and sectors within the space. He did a really great piece on the whole Iron and then UST Luna debacle that I highly encourage everyone to read. So excited that he's going to be joining us in a few minutes. Current update on Terra is down to 0.245. So 24.5 cents, 24.6 cents. Let's be generous. So, you know, great news all around there.
It's rallying.
Bounced up from 0.048 on UST. So I think win peg any day now. Any day it'll be $1.
The Luna, yeah. No, I was
UST.
Oh no, I think, you know, I was joking around yesterday with Luna. I was like, oh, it's finally hitting the peg at $1, and then it
Luna's down at let's see where Titan is
at one point. Yeah.
Let's see where Titan is. Titan.
A lot of people talking about that.
Titan's got a few more zeros. Luna's got a little ways to go to get to Titan levels. But
Niblets did a 12x on Luna yesterday.
Not on $14. Yay me.
But hey, man, that's
dude, but that's fun. That's fun.
Exactly. That's the smart. If you want to,
that's a nice dinner out with the family or something.
Yeah, and look, look, if you lose $14, who cares, right?
Right. Exactly.
But all of a sudden,
lunch,
like you said,
somebody said lunch money.
Yeah, you got you walk out of that with what, 180-ish, 170-ish bucks.
Yep.
I mean, not bad. But that's the way you play those things. You don't come in and drop 10 grand on it, everybody. Something like that. You go in and just,
unless you're Joe, and that is pocket change.
Yeah, Joe. I don't do that though. I don't do that. I don't. Or I had some friends a long time ago that we made some money when I was younger, and they were like, "Oh yeah, now comes the hard part." And I'm like, "What's that?" It's like keeping it.
Yeah, it's is the problem.
The consensus is making money is easy, but keeping it's hard.
It is. It is. It is. It is. Well,
we'll see what happens.
We'll see what happens. Let's see. So we talked about Blizz. We talked about Terra. We had some more tweets surface. from Do Kwon. So I tweeted yesterday. Now I'm completely convinced that Do's mission was to beat irony to a bloody pulp. This was his response to the Iron Finance bank run. And he wrote, new algo stablecoins have all failed. This was, by the way, in June of 2021, have all failed because they solely rely on recursive holding incentives for growth. That is, if you hold the stablecoin, we will let you farm more stablecoins. You mean like a 20% interest rate in a pool, maybe? This leads to a feedback loop where capital flight compresses both the value of stablecoins and the holding yield, increasing both principal risk and lowering returns to compensate. Death spiral. New algo stablecoin developers need to remember that their challenge is economy building, mech design. The only way to stability sustainable use cases around the stablecoins and stability will increase as these use cases become more sticky, distributed, and uncorrelated.
Yeah, whatever. Enjoy your 8x10 pen at Fort Leavenworth shortly. And you can tweet all you. Well, no, you won't be able to tweet there either. They don't give them electronics.
No, there won't.
You're going to be breaking rocks for about 10 years.
He'll probably do a deal where he can still tweet if he agrees to plead guilty or something.
Well, I think that's what's going to be interesting if, like you said, if he shows up for permissionless next week in Palm Beach.
He is not. If
he's on the roster still as a speaker.
Oh my God, dude! If he does,
I'll be hysterical. I don't know if people are just going to.
Well, I read yesterday that
him on the stage or something.
He called in the Korean police because people that lost their money were coming to his door.
That's funny. Hey, our Get Fubar's in the green room.
Whoa! All right. Yeah. Excellent.
Okay, one other thing we want to tee up for him too is, is he hearing anything on the Anchor protocol?
Let's just see what he has to say.
Yeah. Is he? All right, fire him up.
Hey, Fubar, how are you, man?
Hey there, doing great. How are you guys?
Awesome. Thanks for joining us, man. Appreciate it.
Absolutely.
Awesome. And thanks for all your contributions to the space. Really, really, always a learning experience following you.
Thanks. Appreciate it. Try to, it's not nonstop learning on my side too. Never a dull day.
It never ends, man. I don't know. I mean, I feel like I'm constantly learning, and then I read things from people like you, and I'm like, okay, there's no hope. I am never, ever going to get to that level. I just have to keep following people like you.
Well, we're getting niches on niches on niches now.
Yeah.
Like I felt in a lot of my element. I thought I had a pretty decent handle on how to handle the EVM ecosystem stuff and where to look and where to find things.
Right.
And then, so I'm looking for Solana or Luna dashboards. And it's like a whole nother world out there. Like I'm almost take a Venn diagram and whole different set of operating people.
That's crazy. What's your first of all, let's give us whatever level of intro you're comfortable with, kind of what's your background and how'd you end up here and commentating. And I know you're a developer and you do other projects, but give us some insights.
Yeah, absolutely. So I'm technical first and foremost. been in the DeFi and NFT developer, been in space for a while now. I've launched a couple of things of my own, and also doing significant contributions with Alchemix at the moment. So yeah, came into
awesome.
the space kind of very, very highly technically minded. Did a lot of MEV work, and then I've realized the importance of just understanding how all the pieces fit together. And so I feel like there's a significant lack of just accessible explainers and accessible material. You get, if you Google like what is crypto, or what is DeFi, it's like, this is Bitcoin, and then you've got like random white papers, most of which are false. Right. And then there's nothing in the middle. So
I think that's an awesome niche, man, because that's exactly what I felt when I was reading this piece by you, was that and your piece on privacy coins, that was an awesome review. I mean, really gave me insights that I didn't have prior to. And I think you're absolutely right. There is this space in the middle that's really desperately needed in as people enter the system, and then as they've kind of gotten their feet underneath them, have a wallet set up, have done a couple of things, being able to kind of digest and understand what's in front of them and the options for a particular protocol, whatever, it's really tough. It's really tough to find the right info.
Mm-hmm. Absolutely.
So are you actually doing dev work with Alchemix? Because I'm a bit of an Alchemix fanboy. So
yeah, I am. So we rolled out our multi-chain first multi-chain expansion last week. Got on Phantom. Kind of interesting timing with Phantom is kind of experiencing its own little crypto moment. So yeah, been awesome stuff. V2 launched last month with expanded collateral types, higher yields, better strategy isolation, then also doing a tokenomics revamp as well. So
that's awesome.
Very exciting stuff there.
Well, it's one of my favorite protocols, and it's the protocol I think has the best shot at being first out into the real world. And so I'm actually very excited about V2. I interviewed Scoopy a while back, and we were supposed to interview this week, but he had a bit of a health issue one morning for him. And so we'll get that scheduled back up, but I'm actually so excited about what's coming for Alchemix. Have you guys been able to, with all this downturn, have you guys been able to see any uptake yet overall in usage of V2 or on Phantom, or is it you feel like it's kind of everybody's just kind of waiting?
Yeah, so it's definitely a protocol made for these times. Like kind debt means that you can't get liquidated.
Yep.
So I think like the past day or two, everyone's been running around like a chicken with their head cut off. So the concerns have been more on the help. Is Tether going to zero?
Right.
They like what DeFi protocol should I adopt right now? But I think that the moat for a lot of these things is brand recognition, longevity, and quality. So just being in the DeFi space is frankly brutal with how many hacks and exploits there are. But the ones that survive and are able to weather multiple bull and bear cycles and keep their focus on the right things are going to come out with incredible blue chip premiums. So yeah, loving to see the adoption there. And I think a lot of people are going to be searching for that once they.
Yeah, I think one of my most popular tweets was I wrote up like 15 use cases for Alchemix, and that kind of blew up. So I'm, like I said, I'm a bit of a cheerleader. Yeah. So
I'll read that piece again.
Yeah. I'll share it with you in a DM. All right. So let's talk about a little bit about the news of the day and this. And if you wouldn't mind kind of, I don't know if you want to try to summarize this article you wrote and give people an overview, but I think a lot of people kind of have a vague, understanding of what's happening with UST and Terra and stablecoins in general. But I'm thinking that maybe if you don't mind just giving us a little summary and your thoughts on where it is and where we're headed with it.
Absolutely. So Terra itself is a layer 1 blockchain that very much like a Solana Avalanche competitor that has 2 tokens instead of 1. So they have their native governance token, Luna. Then they also have a stable coin, Terra, or UST. And these two are linked in an interesting way because the stable coin is kind of created at the base layer instead of Ethereum stable coins like DAI, USDC, USDT, or just smart contracts built on top, whereas UST is kind of a first-class citizen on Luna. And the two are linked in that as Luna price goes up, people can mint more and more UST. And the peg redemption mechanism, what it's supposed to be, is that if UST ever dips below $1, people can burn their UST, get Luna, get $1 worth of Luna, and sell it in the open market. So this is kind of the perfect storm for both huge speculative run-up, because as people who are holding Luna, they mint some stable coins. They use the UST to buy more Luna. Luna goes up. They now have more capacity to mint more stable coins. They use that to buy Luna, and kind of this cycle that spins upwards.
Right.
You use your collateral to buy your collateral, which pushes up the value of your collateral. But unfortunately, and so that's what fueled kind of the run up from $50 to $120 in over the past month or two with the massive, and Do Kwon also purchased, I don't know the exact number, but I think between $1 to $5 billion of Bitcoin or so.
I think it ended up at like 2.6 prior to the rundown, but I'm not sure.
Yeah. So people got super excited about the Bitcoin to bolster the peg. But then what happened is that people essentially Luna went down for idiosyncratic reasons. Whole market kind of crashed.
Right.
And people started trying to get out of UST in mass. Some people think it was a coordinated attack. Very, very, very well could have been, but the fact of the matter is that it was a vulnerable mechanism, whether or not it was a coordinated bank run or organic bank run. So a bunch of people redeemed their UST for Luna, sold the Luna, but then that which causes Luna price to go down, which decreases backing. So more people redeem stable coins. They get more Luna, they sell it. So the backstop for this entire system is assuming that there will always be a market bid for Luna, which is true 99% of the time. But when it went from $100 to $1 in 2 days, the market bid starts to disappear, and you can't sell any amount at really any price.
Right.
So you get this death spiral approach.
And that's, I mean, essentially the mechanism works great when people are buying up, but obviously as soon as there's any fear around the stability of Luna's price, then that triggers the DPEG, which triggers more selling, which just, it's an endless spiral.
Yeah, exactly. And so, it becomes a confidence game. And I think that was the original reason for the purchasing of the Bitcoin collateral, is that there was actually the beginnings of a bank run earlier this year, I think February or March, where Luna price dipped from 80 to 40, and the peg briefly broke, but then it regained. So the goal of that was, hey, if we can print money, we use that to buy Bitcoin. Bitcoin goes up, theoretically we could be fully collateralized.
Right.
So if they'd survived for, I don't know, they would have needed significant Bitcoin growth. But if we had like 200K Bitcoin in 2 years, then things could be at a fully collateralized setup. Although not really, because people would be speculating in Luna and driving the price up and tripling the supply again. So kind of an endless chasing your own tail game.
Well, and you commented in your summary of this, you went in depth into kind of what happened with Iron Finance and Titan, and there's not a lot of differences between those protocols, right? I mean, except for one had its own blockchain and the other didn't. But from the basic modeling of the algorithm, do you feel like they're essentially the same thing, and they resulted in the same end results for everybody?
Yeah, the mechanics are essentially identical. It's interesting. I actually found a thread from Do Kwon from June of last year, right when.
Yeah, I just had that up.
Yeah, right when Iron Finance collapsed. He was saying like he says like algo stable coins are bad and they fail, but we will do it differently because people want to hold ours.
Yeah.
So like
yeah. Well, and he actually talked about the exact same things that happened to UST. It's
yeah.
I keep saying he's trying to kill irony.
It's not like if you really think about the mechanics, it's not this advanced mathematical attack. It's if everyone's selling, then they have nobody to sell to. So yeah, I mean, I'd say the two differences are that, well, Iron at least had partial collateralization. They had 75% USDC compared to Luna, which got a 20% Bitcoin backing by the time it fell. And then, I mean, yeah, kind of the tying in with native blockchain security is interesting because theoretically you do have the governance token is backed by future cash flows, but those cash flows are very small. I mean, people love to value things at a PE of like 40 in crypto. And then things go badly and they turn to valuing them at like a PE of 0.5.
Yeah.
So like that valuation based on cash flows is not a super reliable floor for people to rely on.
Absolutely.
And then it also printing too much Luna, they had to shut down the blockchain yesterday because it became too cheap to perform a 51% attack.
Yep. Yeah, because they didn't want validators to take over and drain the network, right?
Yep, exactly.
Yeah. And then they actually stopped it twice yesterday, I believe. The last tweet I saw yesterday afternoon basically sounded like they were saying, "Okay, we don't know what the hell we're going to do now, but we're shutting it down again." I don't know if they restarted it or not.
Yeah, the Luna minting has been paused at least for the last 12 hours. It's at I think 7 trillion now. So yeah, I mean, well, it creates all sorts of knock-on ripple effects. So one interesting tidbit is that a key lending protocol on Luna, which is called Venus, kind of the Aave of Luna,
right,
is the Chainlink Oracle that they obviously used Luna as collateral and had nine figures of deposits ready to borrow. So they used the Chainlink Oracle to get the value of Luna and then say you can take, I don't know, 50%, 80% loan the value against that. Chainlink gave up and stopped pushing Oracle updates. So the price got frozen at 10 cents when Luna was trading at fractions of a penny. So nobody noticed this for 6 hours. There was about a 6-hour window where anybody could have deposited Luna and gotten 20x their money in borrow.
Yeah. Well, it happened on Blizz as well. And they cleaned out what was in there. I think they said 32 million.
Mm-hmm.
It's incredible.
Yeah. So Venus, I mean, amazingly enough, I think they only got hit with 2 malicious depositors and total loss of 25 million, but really should have been the entire, not should have been a moral way, but
could have been
in a pragmatic way.
Yeah.
Should have been the entire protocol. So it's wild how much stuff still goes on and people survive by sheer luck.
Yeah, absolutely. I was going to ask something similar to this, but one of our one of our listeners, Sean, wrote, can the same basic money market play not be played on DAI, i.e. ultimately the same basic principle, crashing margin causes a loss of margin, liquidity, and the end of the peg? And my question was going to be, do you think there are any currently on the market that are not in danger of similar attacks and or liquidations?
I think DAI is a completely different ballgame. DAI is, well, first it's over collateralized. You got 150% collateral, which is even better than 100%. And the DAI collateral is not, it's not solely in Maker. It's in a basket of diversified stuff. You got ETH, you got, well, people hate that there's USDC. But you've got a basket of like stuff with strong support outside. So like ETH isn't going to lose its bid ever. Right. USDC, as long as it has its redemption mechanism, isn't going to lose its bid. So the issue, I think, is when you try to tie the backing solely to speculative value on future cash flows of the stablecoin itself.
Right.
Stablecoin has future cash flows if and only if it is stable. So,
right.
It works if it works, but if it doesn't, then there's nothing, no cash, no backing, no anything.
Yeah, absolutely. We've also noticed there was, and I don't know if this is directly attributable, but the STETH from Lido, I never know how to pronounce it. There were issues yesterday in the curve pool, and I don't know that was a direct impact from UST, but I did see yesterday that some more pools had been opened up, and they were trying to provision out some of that cash out of where it was. But did you take a look at that? Were you aware of kind of what was going on with that?
Yeah, actually, I have a tweet from last week, kind of like talking about I'll see if I can find it, but kind of talking about how everybody who was leveraging up on STETH was gonna get wrecked in a massive liquidation unwind in a couple of months. In private chat, but
cool.
Got it. But yeah, so apparently, I don't know. There's something about seeing a top 10 coin go to zero that makes people very skittish.
Yeah,
and lose trust in anything else. So like UST goes to 10 cents, and people's response is to first buy the dip at 80 cents, and then double down at 50. And then panic sell everything at 25. And then the next day their response is, holy crap, I got to get out of Tether too. I'm gonna sell my Tether for 95 cents and buy USDC at $1.08.
It's insane.
And then so now they're on to STETH. They're like, can this be depegged? So
right. And it actually did a little bit yesterday. I think it was
it still is. I think it's about 4% off.
Wow.
I think it's about 0.96 ETH right now. The thing with STETH is that it's fully backed, but it's backed by future unlocks.
Right.
So one STETH is guaranteed to give you 1 ETH a couple months after the merge.
Right.
But you can't unstake until then. So it's kind of it's a one-way street right now that will open up the other way in a bit. So what that means is that arbitrageurs should keep the market relatively stable, where there might be a slight discount based on the time value of money, but not more than that.
Right.
But the thing is, in the meantime, the only way to exit STETH is by selling it on the open market. And so if enough people sell, then the price goes down, no matter what the future fair value of this thing is going to be. And the compounding factor is that a lot of DeFi people have come up with that there wasn't a yield arbitrage to be made where you could borrow. STETH is yielding, 5% right now, but you can borrow ETH at 0.1%. So there's a 4.9% yield spread to be captured if you borrow ETH, deposit it into ST ETH, and then pay it back later. So a lot of people did like 5x leverage on Aave and stuff like that. And in that case, they can't wait forever, because if price ever goes down, they get liquidated. Same thing as like, I don't know. I think ETH is going to 1,000. You can't just short, because if it goes to 4,000 first, then you're broke. And you can say I told you so all the way down, but your position's gone. So that's actually the hard part about expressing most crypto positions, is everything's instantly callable. It's not like an option you can buy and forget about. If you're on leverage, you have to be watching and making sure you don't get liquidated every second of every day.
Right.
So ST ETH, I wouldn't expect a prolonged. Well, there's no reason it has to trade 1-to-1. It should, because of future cash flows generally, but it's not meant to be a stable ETH. It's meant to be a staked ETH.
Right.
So I guess I think that there are going to be a lot of very aggressive buyers. If you can buy at 0.9, then you just made 2 years of staking yield in a day.
A few months. Yeah.
So So no death spiral risk or anything there. But if you're leveraged and your liquidation is 0.96, it doesn't matter if it goes to 0.9, you're gone. If it goes back to 1, you're still gone. So I think
you've lost it.
There might be a little washout of people who got greedy, but nothing more than that.
I hope you're right. That's good. So did you imagine, I don't know, 3 years, 5 years ago, that you'd be sitting here discussing complex financial topics? Did you start off as a dev in the tech world, and kind of how did you progress into it?
I've always been very interested in finance, although I think topics I was exploring a couple of years ago would make anyone laugh today. More about the fundamentals of gold mining stocks.
Oh wow!
In third world countries. That did not go so well. And my attention is focused on crypto now. No, but I mean, like, I love Talib's like a famous crypto hater now, but a lot of his principles and thoughts on just long tail stuff were super informative. So yeah, I've always been like fascinated by the intersection of like finance and quant stuff, but yeah.
Oh, well, good. So you were on the mindset for that. I think so many of us are climbing into topics I personally never dove into previously. So my learning curve is probably steeper than somebody that at least already had a deeper interest in it, but that's great. Other projects besides Alchemix that you like, and everyone knows here, this is not financial advice, and they need to do their own research.
Yeah. I mean, I try to avoid specific call outs. I mean, working with working with a couple other ones as an advisor, but try to avoid chilling too much.
Yeah, and I guess I should have rephrased the question, and you still don't have to answer it. It's fine, but I'm thinking more along the lines of, are there projects maybe in the stablecoin space that you like, kind of how they're doing things, or in other aspects of this world that, from a technology perspective, you're fascinated by them, or you think they're doing something innovative?
Yeah. So generally speaking, I think the option space is still highly unexplored. You've got a couple key problems like liquidity fragmentation that the most leading stuff suffers from. I think that the stablecoin space, this is a bit ironic, but I think the stablecoin space is quite bright for moderately algorithmic stablecoins. So clearly 100% backing works. 20% backing does not.
Yes.
I think that 25 and 30 are also doomed to fail, but there are some interesting experiments with like 90, 95 that run via autonomous smart contracts and not like an egotistical Korean guy. So things actually get done when they need to. And then, I also think that the crossover of DeFi and NFTs has begun to be explored, but is fascinating. And NFTs as governance tokens, NFTs as power ups or boosts for protocol interaction, DeFi elements to NFT projects. So NFTs, I think, are the retail killer app in a way that DeFi is not.
Yeah.
But the merging of those two has potential to be incredibly powerful.
I completely agree. And I think we're starting seeing somebody's passed to me the other day. A friend of mine passed to me the other day a new proposal on Ethereum for a lending mechanism built into NFTs. I've got to look up.
Was it JPEG'd?
I'm trying. No, it was a. I've got an EIP number, I think. Hold on a second.
Oh, an EIP.
Yeah. It was an actual proposal for Ethereum to, let me see, ERC 4610, an extension of ERC 721 to provide standardized token rental and loanable protocol for applications on games, etc. Anyway, I and we don't have to get specifically into that, but the reason I brought it up is I agree with you. I think that the potential for merging of those two worlds is pretty significant, and I think we're going to see a lot more functionality built into NFTs that goes far beyond where even we are today with art. So I'm actually very excited about what that could do.
Mm-hmm. Yeah, absolutely. I'd agree there. And we're starting to see kind of the first primitive spin up. Stuff's hard with NFTs because you don't have deep liquidity.
Yeah.
Everything's based on order books. And even the order books can be off chain. But yeah, I think a protocol called JPEG launched a week or two ago, where they're offering 33% loan to value against CryptoPunks. So if you've got 50 ETH CryptoPunk, you can borrow 15 ETH worth of their stablecoin. It's looking like a profitable business already because several people have gotten liquidated.
Oh,
the
man.
Protocol's just out there buying punks for like 20 ETH each.
That's incredible.
This is sustainable revenue. It's hilarious because it's like the sole loan risk mechanism. The only bad thing that can happen, like the only thing you have to pay attention to, and people are out there like, taking mid 5-figure loans and getting wrecked. Like
it's incredible. I'm amazed every time I see people not paying attention to where they're leveraged. I can't fathom it, man. It's like,
I don't touch that stuff anymore. Just frankly, because I'm trying to sleep through the night. But there's a time in my life when I did, and I would wake up at 2:30 in the morning in like a cold sweat, like having dreams about whether the price had moved up or down.
Don't need that pressure.
I don't know how people do it.
Well, and I look, I mean, I think it's bad enough the impact on us individually if we're playing the leverage game, which I don't do, but it's worse the overall potential impact on the entire ecosystem. I mean, we've seen multiple scenarios of cascading liquidations in just this year. And to me, I think there's a real concern about how do we make sure we ensure the health and safety of the overall DeFi world while also allowing people to permissionlessly do what they want. And I think that comes from, providing data and information and helping them understand that, the potential to harm them personally if they invest in this particular leveraged position is pretty dramatic, but also could have an impact across the board. And then I think that lending protocols are going to have to figure out how they make sure they're all sharing data for at least the impacts that the current leverage status on just a given project could have. So I'm hoping we'll see that at some point.
Yeah, I agree there. It's a bit of a prisoner's dilemma too. Like if everyone in the world is safe and conservative,
Yeah.
then you can happily lever up because they're not going to come cascading down on you.
Yeah, you're not
But
worried.
if everyone else is just a sheer degen and like 10x levered Doge at 0.6942, then you need to be in cash. So you can buy the wicks when you wipe them out.
Exactly.
So like I don't know, maybe in the long term, and you kind of see this with protocols too, like the one offering 95% LTV gets 100x the adoption of the one offering 90% LTV. So
it's crazy.
It's a race to the edge of the cliff and see who can stop before they fall off. So I don't know. Maybe market forces mean that all the people who have it in their blood to live at a red health ratio eventually lose all their money, and the only people left are the ones who bought it from them. Like I
Picked
don't
up
know.
the pieces at the bottom. I love
For
that.
example, I think all the people who love buying algo stablecoins are a much smaller economic percentage of the crypto world than they were last week.
Yeah.
So buying power for an algo stable L1 is far lower than it previously was.
It makes total sense. Yeah.
But yeah, for sure. It's wonky dynamics.
I read your thread on privacy projects, and I was fascinated by it because I actually had some bad assumptions about some of those projects being completely private. And you really pointed out quite a bit about what was actually there. My kind of question is after you took kind of a deep dive into that world, do you think, as much as humans complain about privacy and say they're worried about privacy, do you think we'll ever actually see adoption of these kinds of projects at any kind of level?
I think we're headed for a very severe bifurcation. So like 100 years ago, people didn't have privacy per se. You might be living in a room and sleeping in a bed with other people and barely have a spare second to yourself. But if you said something dumb or mean or violent or whatever, then like max downside is a couple of people get mad at you, and maybe you get the cold side of the blanket tonight.
Right.
You don't have like a mob of 100,000 people coming after you for years on end because you slipped up once. So I think that just the sheer reach of the internet and technology makes the implications for, this is getting too philosophical, but makes the implications for social interaction so much higher stakes, given that everything's recorded forever and can be used against you in a time of shifting social norms. So you kind of need to seek out greater privacy than you would have in different time periods. And then crypto is, in one sense, the surveillance state's dystopian dream. Everything's immutably recorded on a ledger, and if you make one mistake in 2027, everything you did in 2021 is instantly revealed to the world.
Right.
Now, this is mostly used for good, as like Zach XBT exposes scammers.
Exactly.
But I think that's a function of, I don't think it will always be that way. So I think that we're going to see a bifurcation of like extreme surveillance and extreme privacy. And obviously this is probably 5, 10, 15 years down the line. The sheer cryptography tech is not there yet.
Right.
But I would like for people to have the option to opt into like secure blockchain systems where they're free to interact. Obviously, there are negative externalities of you can't stop the terrorists, but I think there's a lot of social good that comes from that as well.
Yeah, I totally agree, and I certainly would like to see adoption. The fact that encryption hasn't been adopted in all these years in at any level of significance in email, to tells me that whomever is going to win, if they're going to succeed in getting people to actually use it, they're going to have to make it so that you don't even know you're using it, right? Except for the benefit of knowing that your information is private. That if users have to interact and initiate privacy and it requires more work, they have proven historically that most of them won't. So I hope you're right, and I hope we can get there.
Yeah, I'm kind of with you there. Like the evolution of NFTs and what people are willing to accept in the space. I don't know. Like stealth drop a link where you can KYC for a surprise,
right?
And people are okay with that.
Yeah, they're doing it. Yeah.
Yeah. Clearly, the crypto decentralization ethos is not the dominant one. So that there has to be some sort of forcing factor or innovations that make it absolutely seamless. And even if it is seamless, gigantic political fight to be had, and won. So I'd agree with you. For it to be adopted, it has to be the default.
Right. It has to be just the way it is, and that's the way it works. Absolutely. Are there any when you're doing research or doing investing? Do you have any tools, sites that are your favorites? You think would have a general appeal to people that are investing in this space?
It's a great question. From my side, I approach things on a more fundamental view than, say, technical analysis or short-term trading.
Right.
I know there are people that do that and have been very successful with that. So my go-to, I mean, there are a couple of key factors, like what's the circulating supply, what's the liquidity depth, what's the fully diluted value. So CoinGecko is generally pretty good for that.
Good.
There are, like, Dex Screener is great for tracking like size of liquidity pools. And then I tend to go just to the docs to get a feel for all the mechanics of how things work together.
Right.
One thing is that people often give you a very, very simplified view of how a protocol works, like on Twitter or on a blog post.
Sure.
Either because it's tough to convey or they themselves don't understand. So you have to go straight to the source for a lot of these things. And I'd say I'm able to do that because I have moderate technical abilities and stuff there, but it's also something that you can teach yourself. If you go and you've never read like project docs before, obviously it's going to be confusing and hard and none of it's going to make sense. But if you go to the docs for 10 different lending protocols and you read them all and you compare them, you start to see where the differences are.
Yeah.
And what some projects point out and others omit. So I'd say just very, very simple, like token mechanics, and then team quality, and then docs of how it all works and fits together.
Yeah, that's awesome. And you're right. Look, I mean, most people in this space can read docs and eventually figure out what the terms mean, right? I mean, it's a Google search away, and I love the idea of comparing similar protocols in the same kind of market segment. And I think that's really smart to do, because that'll really help you understand the differences as you're doing the research. That makes a lot of sense. I'd like to introduce you to my partner, Joe, who hasn't said a word the entire time. So I thought I'd make sure that I wasn't just cutting him off, or, if he just really felt like I was doing such a brilliant job of asking questions, there really didn't need to be anymore. So I'm kind of putting him on the spot of either having a question or telling me I'm brilliant. So let's see what happens.
Hey, Fubar, nice to meet you. I'll go with the former here. What I'm curious about, just back to stables, what just generally, what do you think about Frax?
Frax, I think they do a lot of stuff well. Their AMO is kind of a standard for people to follow. It's held up. They've put forward a good plan to like move from fully over collateralized gradually over time to partially collateralized, which I think is the only way to do it. So
makes sense.
Yeah, I high opinion of them.
Oh, good. Yeah, that's one of Brad's favorites too. That's why I was curious. So I was going to lob a little softball up for him. And since you already guys have an Alchemix Love Fest going, I figured that would be the second one and get to be engaged before this is over with. But no, we're big ALCX fans, of course. Just the whole concept is brilliant in my mind, and
the team is not Doke One.
Yeah, and they seem like
that know of. we got Sifu on board.
There you go.
Joining.
Cesta's coming too, right?
Yeah.
No, I love the concept of it, and I see so many interesting things that could be done with it. And then Frax, of course, we like that, and we're kind of been digging into the FPI one that's tied to inflation, trying to dig through the dynamics of how that works. Have you had a look at that or thought about that at all, FPI?
Yeah, FPI. I'm still a skeptic on. My big thing with inflation tracking stablecoins is that there's a market rate of interest, which is what people are willing to pay, supply and demand to borrow things. And then there's the inflation rate, which can be higher or lower than the market rate. If the inflation rate is lower, then who's going to want to hold an inflation peg stablecoin at 5% when you can just hold a normal stablecoin at 10%? So inflation pegging only makes sense when the inflation rate is higher than the market rate. But when the inflation rate is higher than the market rate, who's going to pay you the yield? It has to come either from the money has to come from somebody, and whether it's protocol subsidization or other trickery. I just don't think that you can generate at scale an above market rate of yield. So I know that like FPI, if I'm remembering correctly, they have an oracle and it's like a perp based model, but in that case the perp should just settle at the delta between inflation and market yield. So I don't know. People are very excited about it there. I haven't looked in a couple of weeks. It would be a very neat primitive, but I'm just kind of going from first principles. I don't see how it can scale.
Yeah, I was kind of in the same boat, a little skeptical. Just in that, I mean, I get the concept of what they're trying to do, but kind of like what you said, I don't really see the real need for it in so many ways myself. I mean, I don't know if you were getting to that level of if there's a need, but I don't, because I think that, look, asset valuation tends to settle in around whatever, the inflation expectations are. Like if you look at, what is it, the European contracts, I think it's Eurodollars or something, where, that sort of sets the expectations of US inflation. And you see people buying and selling there to sort of adjust, their assets around what they think inflation is, to hedge or amp or whatever they're going to do around that. So to me, that's kind of a little bit, not quite getting it in a lot of ways. I get the intent, but I don't know if that's the right mechanic. But, that's just me. I like it. I like the guys, the team. I think they're smart. I just think it's a hard one to really figure out, I guess is what I'm getting at.
Absolutely. And there's no shame in trying things and tweaking the model. Nobody gets stuff on the first try, and most things fail. So I think it's awesome people are trying hard things. And I don't see a need for it. I don't know. I'm just a math guy, so my perspective is it useful, but can it be done? And then the people will decide if it's useful.
There you go.
Yeah, but I don't know. Maybe this perspective needs more color, but it also seems like inflation is kind of the average of everything happening in the economy. So you would expect that the high risk, high upside things outperform that with higher volatility, and the low risk, low upside things underperform that with lower volatility. So I don't know that you can like boost up the risk-free rate to the average, because then the average moves up as well.
That's
So
a great
I
point.
see inflation
That
as
makes
the
sense.
average of the risky and safe things going on. And by definition, the safe things can't be yielding inflation. Otherwise,
They're not safe.
inflation would be higher.
Yeah. No, I didn't even think of it that way. That's a really good way to think about it, because everything is a basket of assets where you're trying to beat inflation in the least risky manner possible as an investor. And so, you kind of do that through portfolio allocation or diversification, not, not having a one button push, so to speak, like buy this and, you have it optimized. I think that you don't. So yeah, that's good. Very good, interesting math point there. I didn't think of that.
It's like they say. It's like they say in The Incredibles: if everyone's beating inflation, nobody is.
That's right. That's absolutely right. There has to be people not beating it, or others can't beat it. Yeah. That's cool.
That's great. That's great.
I know we got to go in a second, but I did want to ask, just if you don't mind, have you seen any there's a lot of talk about on Anchor protocol about or Anchor about a lot of the big DeFi protocols having their treasuries there, and fallout from the the Luna UST issue. Have you heard anything about that, and just chatter that you're seeing out there on that issue?
Just anecdotally, I have a couple of friends, won't name names, but who managing various projects and had stuck portions of their team or protocol funds into Anchor. I was able to. Everyone I talked to was able to get out above 90 with some encouragement. So that's good, but certainly just in the broader universe, everyone's trying to run the yield arb trade, right? So if you look at half the latest Hacker News Y Combinator fintech startups, all of them are just like front ends on Anchor. You've got 15 of them, and they're all promising the customer 10%, or investing for 20, and running off with it.
Yeah.
So I think that obviously the markets are very happy today, but I wouldn't be surprised if there's if there's unwinding and carnage that still has to happen.
Yeah.
And kind of funds or individuals where their Terra bets got marked down to zero and have to sell other unrelated stuff. So yeah, the unwinding, I don't know if we're done yet. We'll have to see.
Yeah. No, that makes total sense. I mean, who's going to want to unwind yesterday if they even could? You're going to try to like get a sound plan in place and get out as you can.
Maybe we'll just wait till ETH goes back to 4,800 and then de-risk.
Yeah, exactly. Yeah. So let's go long. Hey man, it was nice. It was nice to meet you, Fubar.
Yeah, man. Thanks so much for coming in. Appreciate your wisdom. Would love to have you back on again. And I've put your Twitter handle up on the screen, and we'll put that in the show notes. The largest, our largest audience is on the podcast, so I'll make sure everybody can connect and follow you on Twitter. And again, really, really appreciate your time, and I really appreciate what you're putting out there to help educate all of us. So, sir, thanks for being a good DeFi citizen. It's much appreciated.
Thank you. Thanks for having me.
Cool.
Thanks, man. Have a great day.
Talk to you soon.
Bye-bye. That was great.
Awesome, dude, man. Yeah, I said you had the interview going, so I was just kind of, listening because
I just didn't want you to feel left out and ignored.
Dude. No. I just am always trying to hold back to not, dominate. So I just,
that's it. That's it.
You shine a little bit.
Feel free to dominate anytime you want.
No, but I love his take on FPI.
Yeah,
I mean, because it's pretty spot on. I mean, it's something that, and I like that he's really, I don't want to say he's likes Frax too, which we do. So, since he's so deep in stable coins, the fact that he thinks well of it is very, very good for
absolutely
Frax guys. But yeah, super knowledgeable, bright math background. I mean, we all love that.
Hell yeah.
Well, as I say, math doesn't lie. It's so it's a good thing. But yeah, we need to get him back later.
Absolutely.
As Alchemix keeps going, I'd love to get more stories out of that.
Absolutely.
So very cool.
Yep. All right, man. Well, that's all I've got for today.
I'm ready to roll into the weekend myself. So
yeah, me too. All right. Thank you everybody for listening, watching, etc. Please tell your friends on Twitter or wherever you have friends. If you
stay
get
off
the
the cold side of the blanket too.
Yeah. If you're listening to the podcast, please subscribe and review us. Every little bit helps. And we appreciate all of you watching and listening. We just ask that if you can subscribe on whatever medium you prefer, YouTube, subscribe, click the little bell. Feel free to put comments underneath the videos when they go live on YouTube, which they should be right now. And we appreciate you. If you have any thoughts, comments, ideas, topics, projects we should be looking at, please don't hesitate to DM me, B05 Crypto on Twitter and Telegram, and B05 Crypto Pound 2143 on Discord. We're always open to hear from you, and my DMs are open everywhere. So thanks so much, Joe. Have a great afternoon. We love you all.